Willy Woo, author of the Bitcoin Forecast on Substack. It's a pleasure to have you here. You, of course, are very well known on Twitter as well as a passionate advocate of Bitcoin and one of the early pioneers of on-chain analytics. First, before we jump in, for people who may not know what on-chain analytics are all about, give us a thumbnail sketch.
Okay, Ash, so Bitcoin, when people approach Bitcoin, maybe from another market, particularly equities, like they're used to having metrics behind companies that they're investing in. And of course, Bitcoin's a network. It doesn't have any of these sort of profit and losses and, strategic quarterly reports. But what we do have is this very visible ledger that's totally available on the blockchain. So this field is really grabbing the data on the blockchain and essentially dissecting it for signal. For example, if the price is about to crash, you can often see telltale signs like long-term investors, maybe investors that have been in the market for 5 years starting to sell. And obviously those are the investors that have more experience in the market than the guys that just bought 6 months ago who are buying, So that tells you something about what's happening underneath the market, underneath those charts that we see as speculators and traders, which is, price and volume. With on-chain analysis, you see kind of like a ECG of the entire animal of Bitcoin, exactly what's happening, the different facets of the network, what investors are doing, what miners are doing, what exchanges are doing, even what corporations are doing when they're buying or selling. So there's a forensic trail of the demand and supply in this entire market seen on the blockchain.
Yeah. You talk about this as almost an electrocardiogram of the market, the ability to get a current state, a health check on where things are at. As we have this conversation here at the very beginning of September, where do you see markets at right now? What are your on-chain analytics telling you?
It's quite unprecedented right now. We're, getting on our 12th year into this network. And for all of this, we've seen this very cyclical behavior between bull and bear cycles every 4 years. The halvening has had a lot to do with it, where every 4 years the miners' reward gets halved, and therefore the amount that they sell onto the market is reduced by half, and that produces this sort of bullish impulse to market. So we're currently in this bull market coming off a halvening, and most people are expecting a bear market into 2022 because that's the cyclical nature, the 4-year cycle of Bitcoin compared to, maybe a 10-year cycle for macro markets. But what's interesting right now is that we're seeing a peak kind of reaccumulation by long-term investors. And whenever you see this level of reaccumulation by long-term investors, it's usually the fuel to drive another bullish rally, of multiple months. And so as we come into the fourth quarter of this year, we expected a very strong rally and then a blow off top. That's the normal expectation on the cyclical nature. But right now it's like, wow, the data is showing that the structure is completely different from every other cycle. And if it's correct, then this bull market is not going to end end of this year. It's going to go well into next year. And potentially there's a lot of evidence now I'm seeing quantitatively with this data to show that 4-year structure is breaking down. So we were locked into this kind of 4-year cycle, and perhaps now we're breaking free of the gravitational pull of this halvening impulse, and the demand and supply from investors and all the parts of the ecosystem are more predominant. And so in that regard, we might just continue to run up with these typically 50% pullbacks, which isn't much of a pullback if you've been in Bitcoin long enough. We're used to like 80% pullback over a year. And we just had one of these 50% pullbacks and, a consolidation of just barely over 2 months, and then we're off to the races again. So I could totally see that being the more, the behavior of Bitcoin in the coming years, where we do this kind of random walk of price discovery as it finds its price at network saturation, where everyone's using this network. So that's the most interesting thing right now to me.
Yeah. I should say, as we have this conversation here on the morning of September 2nd, here on the East Coast of New York, Bitcoin once again above over 50,000 here today. You talk about this as a very bullish outlook that you see, this kind of off to the races framework that you see as a setup. Give us a little sense, Willy, beneath the surface, what are the metrics that you're looking at to determine this, and how are you extrapolating that view?
Okay, it's a real good question. I mean, like when I look at the network, there's so many different metrics you can look at, and they all get used in different parts of the cycle. And currently, the most reliable metrics are all the views into demand and supply, both locally and in the macro sense. So, I'm looking at a chart right now in front of me, and it's looking at what the long-term investors are doing. And so, for example, I work with Glassnode, which does the raw on-chain data, and they process it, and it's a service that many people can use. I pull that in, and for example, they do a metric called liquid supply, and you can look at the blockchain. You can see the millions and millions of addresses. There's multitude of addresses, and then they do the hard work of going, these addresses, who owns them? And they can cluster these addresses into what looks like entities, individual participants that have their wallets spread across all these addresses. And then they look at the interactions between them and the historical interaction. And this metric is very, very telling, because they can categorize the guys that buy. They buy without selling. They're like 75% of their transactions are more Bitcoins coming in, very few leaving. And then they have another category, which is liquid and highly liquid. And those guys are more speculative. You look at their history, and they buy and they sell and they trade. So we can kind of look at that movement between speculative hands and long-term holders. And obviously, as all the supply moves to the long-term holders, the guys that do not sell, you create a huge supply shock. And there's a shortage of coins left by the speculators, and the price just runs up. And so that's kind of like a demand and supply view using their historic behavior. And so that's one of my favorites. Another one is just sheer doing the same thing, but much rougher. Like you say, anything in a wallet held by self-custody or cold storage, those are the coins you cannot buy. And the coins you can buy are the coins that are left on the exchanges. And you can run that ratio, and you get the similar kind of metric. And that's demand and supply also. The supply is what's on exchanges, and the demand is that is held by investors who've got that locked away in cold storage. So those kind of metrics are the most telling and reliable, because I cut my teeth using volume on the network, because that was kind of like a proxy to buying and selling, right? There's a direct relationship. If I'm going to buy some coins off someone else, they're going to send it to me, and you can read that volume moving into my wallet as a trade. And so the more trades you get, the more investors are coming in. So you can look at volume as a proxy to the investment activity. And some of the early stuff was based on that. My first metric, which was the first signal for first on-chain signal for Bitcoin, was NVT, which just ran the ratio of that essential volume between investors and the market cap. And so very much like price earnings ratio, you have the share price and how much earnings that company had. You can run a ratio of its valuation. You've got now in Bitcoin land a valuation, the market cap of Bitcoin, and how much investment activity is going, which is the sheer volume moving between investors. And that became NVT ratio. And you can see oscillations, when it's high network activity by investors and very low valuation, then it's undervalued. So that's another thing we can do, but it's less reliable than this latest generation stuff, which, it's like the network keeps changing. And when you look at sheer volume, you cannot see, like what we've seen in the last 4 years is a mass migration of transactions moving to behind the firewall of exchanges. And you cannot see what the investment activity is really happening inside those exchanges. So you're losing signal. And so, yeah, that's another thing around this on-chain field is it's constantly changing because the network's changing. We're now moving into an era where we have layers above the base chain, whether that be exchanges or the popular thing right now is Lightning Network. So now there's a certain amount of transactions moving to that network that's above the base layer, which we cannot see. So those are examples where things change all the time, and you really need to understand what's happening with the network in order to account for it.